Right, so we've made it to the section on the course about low traffic areas, LTA zones. Now, what does it mean when something's low traffic? Well, if you think about a street, or you think about a road where there's no cars, no traffic, anything that wants to move up that street has no obstructions. It can pass through clear. The same thing applies here for the markets, and specifically when you're marking up your charts. So a lot of the time it's all too easy to be only focused on marking up your zones in terms of support and resistance, maybe even identifying areas of consolidation or minor consolidation. But when you can pinpoint these areas of low traffic, this can come really handy in marking up your charts and almost confirming that if you predict a move to go a certain way, oh, and there's an area of low traffic coming up too, this is another confluence that builds your confidence in the move that's coming up. So to get a bit more technical about what low traffic areas actually are in terms of the charts, these are price points where historically there's been little to no resistance for the price to move in these areas. And the key word there was historically. This means that we can go back in our charts, utilize back testing to confirm that these are actually areas of low traffic, low resistance. And these are patterns that happen again and again. And I'm going to show you in a minute how these can be identified on the charts. So when you pull up any point in the chart that you want to look at, we first need to understand that although there may be low traffic areas, we need to identify what high traffic areas are. So these are areas of a cluttered mess of candles, really not somewhere that we want to look to be trading into. And there's also no clear path for market movements. So to give a brief example of an LTA in this scenario, here we could pinpoint one large bodied candle and it has a clear movement in terms of its volume. It really has broken price out of consolidation and forced the market down to continue its downtrend. We could also talk about specifically this candle as being a momentum based candle. It's shifted the momentum of the downtrend and allowed it to flow freely and to keep moving. So if we proceed to mark up our main support and resistance zones, as well as this minor resistance zone here, we can use this LTA candle as a type of recent historical price movement that we can utilize in our predictions for the next movement. Now when we watch what the chart does, it makes its move back up to this minor resistance zone and waits to break through. When this bullish candle does break through, notice how it mimics almost the exact same body formation as the LTA before it. Also taking into consideration the wicks of the candles previous, there's no point in looking too closely into a smaller time frame. We need to scale back. We need to widen or broaden our vision here. And let's say we've back tested and done this. Let's pinpoint areas of potential low traffic that may be of use to us in the future. In this scenario, we can see multiple. And unlike the first example I showed you, it helps when the candles are two or more. Basically, the larger the road and the less dense the traffic, the more chance the market's going to move in that way. This singled out candle here, in its attempt to keep moving down, it was entering into an area of high traffic. So this is a key point to consider. If consolidation forms within an LTA zone, this can almost act as if it's cancelling it out. Now that's not to say that it might not make that movement again in the future, but there is a possibility that these will cancel it out and block. These are blocking candles. Now here's when it starts to get interesting about LTAs. To help us visualize this better, if we mark up a zone here to identify the LTA and we account for this slight pause in the market, we're really narrowing down on where's the most potential in this LTA. We start to see that it's made almost polar opposite reflections of each other. When we do this exact same process for this next section down below, and consider this was an area where there was minor consolidation, we see that there was indeed an area here where the price did move freely. So when marking up your charts and you're identifying these areas of low traffic, it is important to not be too overly optimistic. And this is because it could be very easy to say, here's an LTA, this is exactly where I'm going to trade in. But you need to take into consideration consolidation or any pauses and really narrow down exactly where you need to be in. So when we do the same up at the top of the chart and we identify these reflection points, we can see that it wasn't just these two reflections that had an impact. So even if you think you've missed your opportunity to get into an LTA zone, there's always the potential that it's going to make that same movement again in the future. So this promotes the act of looking back in the charts to further build your confluences and know exactly where you need to get in. So eventually the traffic has to stop somewhere, and in this case the traffic has been stopped by minor consolidation areas. And where you see these areas that I've labelled in yellow, it gives you a better perspective of how this works. The traffic has to move and then stop. It's almost as if it's like real traffic on the street. The cars can move and then eventually they have to stop at a stop sign or a light. is very similar. Notice how after these points of consolidation the price starts to move again because it's the only way it can break out of it. There has to be a candle to break out and to keep moving. So try and switch your mind to start thinking of these areas of minor consolidation as opportunity zones. Again, trading's a waiting game. You have to wait. You have to wait for your move to materialise itself to you. Even this very long and drawn out area of sideways movement was eventually broken by a candle that closed below its zones. And then notice how price very quickly just recovered and went right back up to it was before. It utilised this area of low traffic to move back up to where it was. So the key function about identifying these areas of low traffic is more to help us build our trading zone. Now trading zones are going to be talked about in another video, but essentially this is the main meat of what that is. We need to create ourselves a window of opportunity. The whole aim of the game of trading is to stay in a position as long as possible and make more money, but a lot of the time this just doesn't work the way we want it to. So taking into consideration these areas of consolidation, and it's smart to do so, we can minimize our window of opportunity but maximize our probability of success.